Welcome to Deep Dive with MNCL, where we don't just discuss companies, we dissect them.
Hello, this is Sahil Sanghvi from Monarch Networth Capital, and I'm back with another interesting idea, which is JNK India Ltd. JNK India is a globally leading solution provider in the industrial heating equipment market, specialized in design, engineering, manufacturing, and installation of processed fire heaters, reformers, cracking furnaces, and waste gas handling systems used in refineries, petrochemical, and fertilizer plants. Let's understand why should one look at JNK India. Apart from its best in industry technical expertise, JNK has a solid track record in domestic markets, being approved by 8 of the 12 refining companies. It also has the advantage of one-stop shop, being one of the 3 players in India which manufactures all heating equipments and waste gas handling systems. Further, with scale-up of turnover, JNK India is individually classifying for large project and adding new global licensors like Lummus through the Reliance project and KBR through the regeneration project in the US to its already approved list of licensors like L&T, Engineers India Ltd, etc. Further, competition in domestic markets like Thermax and BHEL either do not cater to all the products or are more focused on PSU orders, which further opens opportunities for JNK. Now, let's dwell into the demand scenario. While capex for new refining capacities looks muted, large capex is lined up for petrochemical capacities for the next 5 years, driven by import substitution, low per capita consumption, and rising demand from packaging, plastics, and construction products. Our ground level checks indicate that the announced projects of IOCL, BPCL, Petronet, and ONGC over the next 6 years can alone drive an annual demand of 2x JNK's FY25 revenue if JNK just sustains the market share and projects executed in time. There are several overseas projects expected in regions like Middle East, Russia, Africa, and the US, which can meaningfully augment the order book of JNK India. Let's take a look at the current order book of JNK. As of 31st December 24, JNK had an order book of Rs 12.3 billion, which easily secures strong growth that is more than 30% for FY26, and new order bookings will determine growth for FY27 and FY28. This business has high asset turnover and low capex requirement, which along with the recent equity raise from the IPO should preserve the net cash balance sheet and lead to improvement of return ratios with rising turnover. Margins should also improve with the absence of ESOP expenses and absorption of high employee and direct costs. Therefore, we estimate a very strong 21%, 12%, 19% CAGR in the revenue EBITDA PAT respectively over FY24-27 based on the strong order book, demand drivers, and margin expansion levers. Now, let's also look at the valuations. At current market price of Rs 331, JNK trades at a very attractive valuation multiple of 17.7x FY27 PE. We value JNK at 25 times FY27 PAT, which is 30% discount to valuation of Thermax to arrive at a target price of Rs 470 with 42% upside and buy rating. We believe that the high growth prospects, margin expansion, and new order bookings will all trigger a re-rating for JNK India. Thank you.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.